Meta stock, is its spending getting out of control? So lately the stock has been getting hit lately, and there's one big reason why investors are starting to question the company. It's not Facebook, it's not Instagram that are suddenly failing. It's the fact that Meta, its advertising business, is still extremely strong, but the problem is what Meta is spending to win the artificial race. You can see it all over the news. Meta is like spending like crazy on AI. So Meta is now expecting to spend between 130 billion to 145 billion just on capital expenditures for 2026. Like a lot of that's going just to AI. So that's the enormous amount of money for them to handle. Now at the same time, their free cash flow has been recently dropping dramatically. So today I wanted to look at Meta stock and ask, just a very simple question here. Is Meta spending too much for AI? Are they just going crazy where they're spending with AI? It could be the case. This is exactly the kind of massive investment that could put Meta in an even stronger position several years down the road, but it could also hinder them. So this is the Stock Likes podcast, and let's get into it. Meta is under pressure. Let's start with what's happening in the stock. That's the main thing to talk about. Meta's share recently came under pressure as investors continue to worry about the enormous amount of money being spent across technology industry on artificial intelligence. On August 18th, just recently, Meta fell roughly 4%, making it one of the biggest losses among the major tech companies for that day. There's another issue pushing pressure on the stock right now. It's Meta is also dealing with major legal issues. It's, so much legal issues that are going on. The trial involving allegations concerning effects of Facebook on Instagram on young users begins this week. The states involved are seeking potential enormous damages. Meta denies these allegations, so investors are looking at Meta for several different angles right now. You've got AI spending, you've got legal risks, you've got concerns about whether the stock valuation makes sense, but at the same time, you've got a company generating tens of billions of dollars in quarterly revenue. So let's look at the actual business. Let's break it down for the business. Now, Meta's core business, the second quarter results, you're very strong. The core business is very strong. We're actually pretty impressive in terms of revenue. So the company generated approximately 60 billion and some change in revenue, which it was up 28% year over year. That's a huge amount of revenue growth for a company of Meta's size. And here's something important to look at. Meta's advertising business isn't just surviving while the company spends money on AI. AI is actually helping the advertising business grow. So they're just not spending and then AI is doing nothing. So the second quarter ad revenue increased 14%. So while the average price per ad increased 12%, overall increases were up 4%, 40%. I can't even believe the numbers. So Meta also had, over 3 billion plus in daily active people, across their family of apps. Daily people checking in almost 4 billion. So that's Facebook, Instagram, WhatsApp, and their other products within Meta's ecosystem. So when you look at these core businesses, I don't think the story is Meta is an old social media company that desperately is trying to become an AI company. Some people look at that, and that's not me. So I think it's more complicated than that. Meta is already has an enormous advertising machine. It's AI to make up the advertising machine better. It's using AI to do that, and that's the important distinction. They dump the whole metasphere and then focusing heavy on AI, which I think is the right move. So AI is already helping Meta. This is the part that of the Meta story that I think investors sometimes overlook. Meta doesn't necessarily need AI to become a completely separate $100 billion business tomorrow. AI is already being used to improve the business it has. Better recommendations, better advertising, better targeting, better content creation, better engagement. And Meta says its AI improvements are already producing measurable benefits. For example, the company reported improvements in ad ranking. So that's great. And then recommendation systems that increase conversions. It's potentially a very big deal there to improve on, because Meta makes most of its money from advertising. If AI allows Meta to show better ads to the right people and generate better results for advertisers, Meta could potentially charge more for those ads. So you got to look at that. That's exactly where we're seeing the numbers. Ad impressions were up 14%. Advertising price per ad were up 12%. And so the company isn't simply spending billions on dollars just on AI, throwing it at AI with no connection to its existing business. There's already that connection. The question isn't whether, results will eventually justify the enormous investment or and where things that's where things get interesting. The $130 billion, plus billion AI bet they're throwing out. Meta expects 130 billion to 145 billion in capital expenditures in 2026. Crazy numbers to think about. 130 to 145 billion dollars. That's primarily about building infrastructure. Meta believes in its needs for the rest of the generation of AI, data centers, computer powering AI infrastructure, and technology required to support these systems. You got to support them. Mark Zuckerberg clearly believes that AI is one of the most important technology shifts of his career. I think he believes that, and he's throwing that money at it. And honestly, I understand why. Look at what NVIDIA has done. Look at Microsoft, Google, Amazon, Palantir that it talks about, and other major technology companies that are doing more, are also doing that. Every major technology company isn't trying to secure enough computing power in infrastructure to compete. They're all trying to do that. It's not just one. The risk for Meta is that a company could spend enormous amounts of money today without getting actual investment returns expected tomorrow. That's the central question. That's the risk. Is Meta investing in the future, or is it overvesting in the AI hype? Some people think it's the AI hype, but I believe it's the future. So let's talk about free cash flow. Everybody loves money and cash, the greenback there. So here's where I think investors should pay attention. Meta's second quarter operating cash flow was 31.9 billion. So I think they're moving to that, almost 40 billion. But cash flow was only 784 million. It's only that much. It's still millions, guys. So that's an enormous difference. The free cash flow was down dramatically from the same period years ago, last year. Why? Because Meta is spending an incredible amount of money on that infrastructure. They're building data centers and all that stuff. Like it or not, that's happening. Capital expenditure during the quarter were around 32 billion, 31.1 billion. So this is, the short picture and the long picture. So the short picture is spending is painful. tons of spending in AI, and then of course the trickle, you have these layoffs from Meta. They're trying to adjust the cost from the AI. I don't like that, but so the spending is painful. It reduces free cash flow, to hire other people, do other things with your business. It puts pressure on margin, makes investors nervous. But Meta's AI investment produces a massive increase in revenue profitability over the next 7 years. All that AI spending is going to boost things down the road. Today's spending could be very different in hindsight. That's the bet they're throwing out there. Meta is essentially saying we would rather spend enormous amounts of money now to build a AI infrastructure than fall behind AI, which could totally destroy their business. They could be like another MySpace, but and I think it's a reasonable strategy. It's definitely not without the risk involved, like anything else. So the Meta's biggest risk. So what's the biggest risk? I don't think it's Facebook. I don't think it's Instagram. I don't think it's even TikTok. I think the biggest risk is this AI investment, and how much they're spending. 130 billion on spending this year alone. It continues to be spending enormously amounts of money this year on AI. Investors want to see results, and sometimes they're not going to be patient for those results. Eventually, invest needs to translate into higher revenue, higher profits, and entire new businesses. Otherwise, investors are going to start asking, why are you spending all this money? Is this money you're spending legitimate? Are there legal and regulatory risks? We're getting into Meta said expects 2026 expenses to be between 165 billion to 169 billion, including the impact of legal charges. And management has warned that youth-related matters could result in material loss. So Meta is fighting on several fronts on this: AI regulations, legal issues, competition, and the enormous infrastructure spending. That's a lot to deal with. So there's the bear and the bull case. But the main thing I want to talk about is the bull case. That's where the money's going to be made. So the bull case. Now let's talk about the other side. I think we already talked about the bear case enough, because I don't want this video to be all negative, bearish on Meta, and I'm not bearish on Meta. There's several reasons I think Meta remains one of the most interesting large technology companies. First, the core business is incredibly profitable. Second, Meta has billions of people using their platforms. Third, advertising is still growing. Fourth, AI is already involving parts of the advertising business. And fifth, Meta has the financial resources to make these enormous investment bets. That's important. Meta isn't some startup spending money it doesn't have. This is a company that has enormous existing businesses. If Zuckerberg is right on AI, Meta could eventually have multiple engines of growth: advertising, AI assistance, business messaging, AI-powered creation, wearable devices, potential entire new products that we haven't even seen yet. That's the bull case. What's out there, what's to come. So why would I buy Meta? So where does that leave us, in all this? So why would I buy Meta? For that question, for me, the biggest question isn't whether Meta is a good company. I definitely think it clearly is. The question is whether the current stock price gives investors enough room for error, because Meta is making a giant AI bet here, guys. If AI works exactly as Zuckerberg expects, Meta could be in an incredible position several years down the road. If AI spending doesn't generate the expected returns, investors could become much less patient. But that's why I think the recent weakness in Meta stock is interesting. Not necessarily saying go buy Meta today, I'm also not saying stay away from Meta. I'm saying that this is a company worth watching very closely, guys. So, I want to see whether the massive AI investment starts showing up more clearly in revenue profits. I want to see whether free cash flow begins recovering. I want to see whether Meta can continue growing its advertising business while funding this enormous AI expansion. Kind of money talks. If those other things happen, current concerns that we have, could eventually look like a buying opportunity. But if spending keeps rising and while returns remain unclear, investors could have a much bigger problem. You know, and that being said, to wrap this up, so if Meta AI spending gets out of control, they're just throwing tons of cash in with no objective there. I don't think we know that yet. That's what makes Meta stock so interesting right now. The company is spending incredible amounts of money, but it's doing it from enormous revenue strength. Revenue is growing, advertising growing, AI is improving the core business, but free cash flow is taking a major hit. Investors are demanding proof that this AI investment will be paid off. For me, that's the story worth watching. That's why I'm watching it so closely. Not whether Meta is going to disappear, not whether Facebook is dead, but whether Meta can turn hundreds of billions of dollars of AI investments into a bigger, more profitable business. That's the bet investors are making right here. So what do you think? Is Meta spending too much on AI, or is Zuckerberg making the right move here by going all AI, all in on AI? Let me know in the comments. Put your comments down below. Yeah, and thanks for watching this video, and thanks for watching the Stock Likes Pod. I hope you enjoyed this video. Subscribe for more stock analysis. Subscribe, like, follow, share, and all that good stuff. And I'll see you guys on the next one. And this video itself is just me with my opinion here, just informational, educational purposes only, not financial advice. As always, do your own research before making these investment decisions. And have a great one.